gold's flirting again with all-time highs. Silver's had a strong move.
Mm-hmm.
We've seen many of these false starts in recent years. From a technical standpoint, let's kind of touch on those two. Are you getting any confirmation of a breakout in silver and gold, or could this just be another rally that kind of fizzles out?
No, I mean they have been in an uptrend for a while, so I don't think these rallies will fizzle out. I think silver has potential to run to about $40.70. If we look at the bigger picture, there's potential for silver to run to about $48. So it's about I think it's about a 13% gain from where it is as you and I are talking right now. So it has some upside potential. It's already popped and had a nice move in the last couple of weeks. So some of that upside has quickly been taken out, whereas gold has been trading sideways for a few months and it hasn't quite had that pop. Right now, gold actually has more upside potential, which probably shocks a lot of people. Gold is about 20% upside from where it is, as you and I are talking, 4,100 an ounce. It's got 20% upside. And that's actually very similar to what happened in 2007. Gold was the best play. Gold screamed higher. Silver did well. Gold miners were not worth it. They ended up moving up a little bit, but a lot of noise. I think the play here is gold. They look like they're going to go higher. I think they're starting there. It's an imminent breakout pretty much. And if gold starts to break out, if you're not in it, I think the breakout is tradable. You can play it up to about 4,100, which will probably happen very quick. Probably over 2 or 3 weeks, it could have that giant run, maybe a month. So there's some really good return on a very stable asset. Gold, you're not going to get your head handed on a silver platter the next day, right? Silver is dangerous. Miners are dangerous in that regard. So it has the most opportunity, the least risk, and it has the highest probability. It wins the most trades. It's the most accurate with technical analysis. So that is kind of the play at this point.
I'm long gold, I'm long silver, but I'm also quite excitedly long Bitcoin, have been for a while, but it's starting to rip again. I don't know how I feel about this recent rally. I'm pretty indecisive on it, but what are you seeing? Is it just momentum driven, like a risk on pop, like everything else right now? Or do you see more of a sustainable breakout taking shape with Bitcoin?
Yeah, Bitcoin, there's no doubt it's in an uptrend. It has a really strong chart pattern. It is still tied to the stock market. It's decoupled over the last week a little bit. We've seen the stock market go up and Bitcoin's gone the opposite direction and vice versa. So there's a little bit of weird chatter there, but it does that because it's not the stock market. It can have a bit of movement on its own. Overall, Bitcoin looks like it could go to about...
Let's face it, one of the biggest frustrations investors have is taxes. You make the right call on that stock or explosive crypto trade, and then boom, half the gains are taxed. You took the risk and won, but the government takes their share of your gains. That's why I'm excited to introduce our sponsor of the pod today, iTrustCapital, the #1 crypto IRA platform in America. They've built a self-directed IRA platform where you can actually buy and sell crypto, gold, and silver inside a tax-advantaged IRA. Of course, you probably know trades inside an IRA are not taxable events under IRS rules. And I think the best part about iTrustCapital is they use the same institutional grade custody for crypto that BlackRock relies on. That is peace of mind, and they do it with no monthly fees, just a simple 1% transaction fee. I've spoken with the team and I like these guys. Real US-based customer service, security, and real tax advantages. And while I personally hold exposure to Bitcoin, gold, and silver through ETFs and mining stocks in my own retirement account here in Canada, iTrustCapital gives US investors the ability to hold the actual assets directly in an IRA. You can fund an account with a cash contribution, transfer an existing IRA, or even roll over an old 401k or employer plan to take more control of your future. So if you're looking to protect and grow your retirement with crypto, gold, or silver, check out our custom link in the description below and be sure to use promo code Pinnacle8 to claim your $100 funding bonus when signing up and funding a new IRA plan with at least $1,000. As always, all investments carry risk, and this isn't investment advice. Now, let's get back to the pod.
$136 per Bitcoin. It's primed and ready for an explosive move. And when it happens, it's probably going to happen in 5 or 6 days. It'll be very quick. So it's primed and ready. It's locked and loaded. And we just actually got out of a Bitcoin trade about a week and a half ago. We hit the targets we wanted. We've moved aside. Again, the Nasdaq is primed and ready for a correction. It's already showing some volatility. It's gapped up. It's sold off in the last couple sessions. Every time it moves up, it gets hit with a wave of selling. So there's some sellers distribution going on. I like Bitcoin. I think it's going to go higher, but you just need to keep your eye on what the stock market does, because if the stock market rolls over, Bitcoin's probably just going to get pulled down. So I wouldn't get out of it. If you're in Bitcoin, I mean, I like it. I think it's going to pop, and I wouldn't get overly excited when it hits 136. I'd be happy and close it out. Wait for like a reset, and that's kind of the best thing to do, because after that, it could get hit really hard, because the timing with the market and everything else, the sentiment that's unfolding shows Bitcoin could have a huge correction. It could be back down in the 80s, believe it or not. After the market turns direction. So
yeah, and the correlation between the Nasdaq and Bitcoin, I mean, just anecdotally from my personal observations, it seems pretty tied together, the Nasdaq and Bitcoin. Is that, from your observations?
Yeah, they move pretty
accurate.
It's a very similar group of people, right? People want to get into fast moving opportunities, growth stocks, high tech, new exciting things. So it's when those people are bullish, they're buying both. When they're scared, they're dumping both.
Exactly.
It's the same. It's a school of fish mentality.